day, all. Ira Epstein of Linn Associates with your agriculture wrap-up for this Tuesday, and we're at the 18th of June, 2019, and just after 3:30 p.m. Central Daylight Time. So the president's kicking off today. He'll be in Florida, kicking off his re-election bid. And of course, you always need something to top it. And the president let word out that he and President Xi had a very lengthy talk on the phone. They have agreed to meet at an extended meeting on the sidelines of the G20. And our trade negotiators will begin with the Chinese tomorrow talking again. That put the stock market up sharply. It put the energy markets, took them right off their lows, kicked them up rather dramatically. It had no impact on the grain markets or the meat markets just yet because we're still in the preliminary stages. But the whole world has been rocking and reeling because everybody's scared of those big words, economic slowdown. So the financial markets reacted. You sold well off the highs of the notes and the bonds as well. So let's go to the weekly chart of soybeans and get a feel for where we're at. For the week, we're up, as you can see, about 16 cents or so. When we take a look at the gaps in the chart, you have a gap that was recently formed here. The question is, will the market try to fill that? We have filled this one. Now, way back is this one. And if it's going to be filled, it's probably a bit later in the summer, if and when we know how the soybean crops are doing. As we take a look at the swing line pattern, you've gone straight on up now from around 875 all the way up to the high of 948, and you're near those highs as we're talking. When you take a look at moving averages, the 100-day moving average on the way back down may well act as the first level of support in the market. If not that, then I would expect the 18-day average. The 100-day acted as resistance on its first challenge here. Then on the way back down, it seems so long ago, but it's only a week and a half ago, it challenged the 18-day average, and then the weather patterns just kicked in, and away you go. Weather patterns still have plenty of rain in the forecast for Illinois, Indiana, the Ohio Valley, so we've still got that cool, wet weather with us. As you take a look at where the market went, and this is important, yesterday the market got up, if you take a look, to 940.5, which was just shy of the upper Bollinger Band of 941 3/4. There's no magic in hitting that number, but often when you do, you back off. Today the market went up through that number and then sold itself off. So I think that the pros took some money off the table at the upper Bollinger Band level. May have done so as you approached it yesterday, but today I think they absolutely did it. In the slow stochastics, you have an overbought market. They have not embedded. So we have a market that has run 70 cents higher, finally got to the upper Bollinger Band in an overbought condition where I think some pros are taking some money off the table. In the meal market, a nice rally today, but it failed to take out a previous high of 328.80. So you have a pattern of lower highs. You have an outside day down, by the way. You have lower low. So if this market set up, it could easily slip back here to this 18-day average for support. Very overbought condition as well. That is not to say the market doesn't have an upside bias. It does, since it's over the 18-day average of closes. In the soybean oil, one of the things I've been pointing out is when you get oil stronger than meal, it's generally a sign the beans might be ready to correct a little bit, and that's just the case you have. You're pushing out on the upper Bollinger Band in an overbought condition, a market that's got a lower low and a higher high. That's pretty much the reading of the bean complex, lower lows, higher highs, not a true if you will call it trend, rather a market that got caught in a weather pattern and soared to the upside. Now in the corn market, after you hit the upper Bollinger Band past 2 days, the market is now in a correction mode. It still has what we call that embedded reading. And what happens is markets typically travel between getting oversold and overbought. Occasionally what they'll do is you get the numbers both that make up the slow stochastic, the K and the D, the red and the blue, and they'll go sideways over 80 several days or more in a line. More times than not, the market will travel between getting oversold and overbought, and if you then turn around and you watch it, that's what it does. Will this market end up with a very short-lived Time over that is the question. We had an embedded reading here. It was lost, and you did retrace to the 18-day average. If it gets lost again, I'll be looking for that. The corn that is now planted is probably it. I doubt farmers are planting any more corn, so now it's going to be a question of waiting until that famous July 4th day and see in parts of the country is corn knee-high or higher. Believe me, it'll be higher in some areas with all the wet that we have. In the wheat market, you're knocking on the door of trying to turn the momentum back to the downside. You lost the embedded reading. So when you lose it, that's often a sign that price and the 18-day average are coming together. I look at this and I say, okay, you got overbought, you hit the upper Bollinger Band, and now you're selling off pretty large from there. Finished at 535. That's 20 cents lower on the close than you were at the highs yesterday. That's a big move. And I don't think wheat's the mover of the market. I think it's now the soybeans. In the sugar market, we still have that embedded reading. So as I said in my morning subscriber video, I still think the pros are buying the market. There's a moving average I use intraday. If you see that, if you're in my morning subscriber, and I think they bought it and they pumped it out today on this rally. Very close. I'd expect the 100-day average to be the resistance. Until the red line in the slow stochastic gets under 80, I just think this market's going to fight a battle at this 100-day average, which has shown up to be a good resistance point. In coffee, we're still very much in a downtrend, but very oversold. Lower highs, lower lows. Once this market cleared this number, 103.05, the game ended. And you can see how the market just worked itself down because those that were hoping this 18-day average would hold and didn't act quick enough, well, they got caught and they're probably coming out of the market. Now that you're getting this oversold, I'd be a little concerned. In the cocoa market, the pattern is still one of higher lows, higher highs, bullish. The bias is up since you're over the 18-day average, but you are very overbought. If this market gets back under 24.48, it could be a signal that this up wave has ended and the market's ready to try a correction to the downside. Much past that, could be into this area. So watch that. That's the number the bull should defend and not allow to be taken out. In the cotton market, you got up today through the old high right here, 66.75. Did that yesterday at 66.80, and today you carried further in the market. Now, you didn't go up dramatically because you finished 66.82. You had gotten to 67.94. Couldn't hold on to the biggest gains that the market had, but it's still in an uptrend at this point in time until the market takes out 65.68. Should it want to extend the rally, then I'd look for resistance at 68.75. In the cattle market, the market, as I said, not going anywhere. You know, you would think that you'd get some of these meats to pick up and run off the news that the U.S. and China are at least back at the talking table. I don't know if it's a negotiating table yet, but at least they're talking. But when I look at it, I can't figure out if that's the swing line low or that is. I always had this problem with this particular formation. So I'll give the market the benefit of the doubt that it's got upside bias. Momentum is pointing up. If the trend is up, support should be here at 105.44, and we'll make it 45, and you shouldn't get back under 103.72. In the feeder cattle, you rallied up today, got up to 138.50. Take a look at where the 18-day average, this line of resistance is, and that's what stopped the rally. Now you're out of a downtrend because you now have a lower low and a higher high, and as I said, you're not in an uptrend. Just negated all that. In the hog market, I was looking at this market when I heard the word about China, not a thing happened. It wouldn't be the August contracts anyways. It's going to be the December and into next year contracts you want to watch for any news that on a breakthrough. I would imagine China's going to buy pork from us, but we're not there yet. Lower highs, lower lows. Now, there's another issue you got to deal with tomorrow. You got the FOMC meeting, and that takes place. I think we get the statement at 1 o'clock and the press conference at 1:30. So you're going to want to see what monetary policy is. Is the Fed going to try to get ahead of the curve, or is the Fed going to get patient here and say, you know, let's just see how these trade talks go? They have until July. They can make that decision. They have until whenever they want. Our economic data in the U.S. is slowing down, but it's not problematic. Some are still in the camp. The Fed doesn't have to do anything. what you get from right here, this is called Modern Trader, and it's their profitable trading strategies in any market. It's interesting because there are strategies that traders can learn to put on. Price action, trading the basics, how to trade. What about a flat base pattern, caliber and affinity, the American crowfoot, and it's not an Indian, it's a pattern. You learn with this, and this is just what it looks like. We've made these into PDF so that we can email them to you very easy, and from there you just open it up, you're able to print them out, read them, whatever you want to do. Depends how big your screen is. But if you're interested in one of these brochures, we'd love to put it in your hands. Just give us a call. If you go to our website, you'll see other brochures you can choose at the same time. We have a window, a carousel right on our home page. Just click any of those and they'll show you all the different offerings we have. Why not avail yourself of it? www.iraepstein.com, and remember, you can click right up here. If you're watching me on YouTube, it'll take you there as well. I'm Ira Epstein. See you tomorrow.